Hi there guys and welcome to the latest episode of the Cryptoverse, your regular dose of news and commentary on Bitcoin, cryptocurrencies and blockchains. My name is Chris Coney, I am the host of the Cryptoverse and the founder of cryptoversity.com, the online school where you set the price to learn about Bitcoin, cryptocurrencies and blockchains. And you can find out more at cryptoversity.com. Now there's a podcast page on Cryptoversity where you can subscribe to the Cryptoverse podcast. And you can do so on a range of different platforms: iTunes, Stitcher, Google Play Store, YouTube, and also Steemit. And to support the Cryptoverse, please click through to Steemit from that page and vote for this episode on the Steem network. Alternatively, please make a direct contribution via a Bitcoin tip to the address that's on screen now if you're looking at the video, or on the podcast page if you are listening to this on audio. Let's get into the market roundup for the day. Let's see what we've got here. Bitcoin's steady. It's pretty much not moved at all in the last 24 hours. It's down 0.01%. So that's pretty much dead, the same as it was yesterday. And it's sitting, according to CoinMarketCap, at $575, which differs a little bit from the Bitstamp price on the chart of $571. So I'm not quite sure where CoinMarketCap gets the figures from, because there are lots of price sources out there, but it's the price doesn't matter that much in terms of being that specific unless you are trading it, right, buying and selling it. So this is just for our market roundup analysis. It's close enough. As long as they use the same data feed every day, the gains and losses should be pretty much accurate. Now let's look at the Ethereums today. They're both down again today. Ethereum Core down 2%, Ethereum Classic down 6.75%. So Ethereum Classic has lost a lot more. It's put Ethereum Core under a $900 million market cap, which it seems to bounce between $1 billion blockchain and not. Even Bitcoin is now under 10 billion, rather than what usually is sat above that. Anything else to report here? Steem token is worth $1.5, $1.50, down 4.75% in the last day. But would you believe it? Oh, this is huge. Dash has gained another 11%. That's, if you look at, 11% puts Dash at $14.60. I'm going to have to look at the graph again, because Dash is on a right steep uptrend right now. Yeah, it's just because it's just so solid. I don't want to. I keep saying this because I'm paranoid about coming across as a shill for Dash. But the thing about the cryptocurrency space is I don't have to worry about that kind of thing, because these are not companies that can be corrupted or whatever. So everyone can see the reasons why, and I can back up with kind of facts, and you can fact check me. If I say Dash is the dark horse and it really needs to be closely looked at as one of the strongest cryptos out there, and then I can give my reasons, and you can double check that, because you can look at the code, you can verify that they have what in my opinion is one of the best governance systems out there. They've got a way of funding their development. They've got a decentralized decision-making system. It's just an absolutely fantastic model. And who was saying this recently? I think it was Andreas Antonopoulos. He was saying, like, a lot of the the crypto anarchists, I don't know what you call them, crypto maximalists, the crypto crazies, if you want. These folks that are like, right, that's it. Now we've got crypto. Let the existing financial system collapse, and then let everybody in the whole world move over to a cryptocurrency. Now, I used to think like that when I first got into crypto, but that's not practical. Not for Bitcoin anyway. Bitcoin just couldn't handle it. At the minute, it's doing all right as a $10 billion market cap, but if the whole global economy decided to shift onto Bitcoin tomorrow, it would collapse. I think it would. The network would get jammed so badly with transactions, confirmations would run into days, and then it would cease to work at all. However, excuse me. Now, let me just say one more thing on that. The thing about Bitcoin is that the infrastructure isn't incentivized, which is the key difference with Dash. And I'm going to flip that around and say, you know what? if there was a massive influx of usage into the Dash network, I reckon it could handle it. Not because of the actual number of servers and miners that it has right now. It's a layer below that. It's the actual structure, the infrastructure that the Dash network is built on that allows it to scale. So if all of a sudden Dash quadrupled in size and volume, then because they have incentivized masternodes, and because they have a budget system, and because they have an adaptive mining system, all of that would allow it to scale in octaves. So that would be a different story if one of the world economies collapsed, so the British economy or whoever, and then decided, right, we're going to switch to Dash as the national currency, then I think it would hold it. It would be able to sustain that. And once it had proven it could absorb that amount of volume, I think that would definitely shut people up about whether that was possible or not. Anyway, Lisk is now in the top 10, having gained 12%. Lisk is a decentralized asset, a place where you can create your own crypto tokens, I believe. Blockchain applications, I beg your pardon. No, that's the wrong one. So this is like an Ethereum but on JavaScript. Yeah, blockchain applications written in JavaScript running on sidechains. So definitely a good use case. I'd encourage you to check that out. Partnerships and cooperations with Microsoft and the Chain of Things, whatever the hell that is. So Lisk did a big old crowdfund, I think, a little while ago. So yeah, good for them. Good to be in the top 10. You get a lot of discovery by being in the top 10, because people like me look at it and go, ooh, who's in the top 10? All right, who else is moving today? Scenarios gained another 6.4%. They're on the run because they're launching their alpha very soon, as I mentioned yesterday. Other than that, pretty normal. Yeah, so we've had some good double-digit gains today. It puts Dash at $97.5 million market cap overall. So I think that's the highest it's ever been, Right, looking at the Bitcoin price chart real quickly here. Not much price movement at all. Still sitting in that range I keep talking about, which is 540 at the bottom, 600 at the top. Reasonably calm. Volumes day to day, pretty normal. About between 2, 3, 4, 5,000 Bitcoins traded every day. And that's in contrast to, what day was that? August the 2nd, when we had that massive drop. So on August the 2nd, we shaved 10%, 11% off the Bitcoin price in one day. And that was on a trading volume of 22,000 Bitcoins. So that's a stark contrast to the, whatever it is we did yesterday, 4,000 Bitcoins. So things seem to have calmed down now. This is after the Bitcoin block reward halving, and it's also after the Bitfinex hack and so forth. I've got some Bitfinex news coming up in the second half. So that should do it for the market roundup. So actually, that's it for the first half. So stay tuned for the second half, where a whole lot more is coming your way. Welcome back to the Cryptoverse. My name is Chris Coney. Now in the second half, we move to the news. Today, the news is courtesy of Bitcoin.com, and our good friend Jamie Redman is the author of this article. It was published yesterday, August the 18th, and the title reads, Bitfinex gives an investigation update. Let's see what they've got to say for themselves then, shall we? Okay, Bitfinex has revealed more information concerning the investigation of the hack that took place on August the 2nd. The exchange explains the company's initial efforts to identify the hackers and the next steps for the business going forward. It says Bitfinex hires Ledger Labs and drops BitGo services. The Hong Kong-based cryptocurrency exchange Bitfinex is back up and operational. The exchange has positioned itself as the leader of the US dollar Bitcoin volume once again this week. But spectators have been skeptical that a lot of the action is due to massive moves towards withdrawals. That could be true, couldn't it? On August the 17th, the company released a statement concerning the recent hack and how it will service BFX token holders. Yeah, so BFX token holders, for those of you that haven't been following, are those IOU tokens, which basically represent stock in Bitfinex's parent company. So it's sort of a debt token. So it's like this token means that you can get on demand some equity from Bitfinex parent company, right? So immediately after the hack had taken place, with a loss of 119,756 bitcoins, the company hired Ledger Labs Inc., a top blockchain forensics and technology firm, to help with the investigation. The blockchain analysis firm is still working on the case, and Ledger Labs is also performing an audit of the company's complete balance sheet. Bitfinex states in its announcement, quote, "The exact attack vector is as yet unknown, but Ledger Labs has already identified certain areas in our architecture that can be improved. Ledger Labs is working closely with our development and operations personnel to ensure that all of their recommendations are understood and fully implemented." So what the exchange does know is that the bitcoins released were never realized by the third-party multi-signature service BitGo, and they never alerted the Bitfinex team. The Hong Kong exchange say they have suspended BitGo's segregated multi-signature wallet solution and have reinstated a different multi-signature cold storage procedure. Now, how can they have done that? Because didn't we say a few episodes ago that it was the CFTC that fined Bitfinex $75,000 for effectively acting like a futures exchange by keeping the real bitcoins in cold storage that they controlled and then basically giving the clients access to futures contracts to trade live. And of course, after they got fined the $75,000, Bitfinex stopped using that cold storage procedure, and that was why there was so many bitcoins in the hot wallet when the hack went down. So how can they now have reinstated a multi-signature cold storage solution? Isn't that just going to put them right back in the firing line with regards to violating the whatever it was, the Futures Exchange Act or whatever we spoke about on that episode? Can't remember the specific statute, but in any case, the company says the solution is safer and more robust with less exposure to coins within their hot wallet system. The company is in the midst of researching other storage options, both internally and from alternative third-party multi-sig vendors. Well, here's a solution. Why don't we use a decentralized exchange? And then that solves the whole problem, doesn't it? Because then you just trade from your wallet. Like yesterday, what did we talk about? We spoke about the first ever hardware wallet that's also a hardware exchange, essentially, because you can trade through Shapeshift via the hardware wallet itself, which is about as close to a decentralized exchange as you can get. Now, it still does go through a centralized place, though, which is the Shapeshift servers. So it's not quite decentralized. You'd need a BitShares or a, what's the other one called? BitSquare, to be truly decentralized. But BitShares is the one for me. It's the one I use anyway. The exchange says rumors circulating concerning BFX token holders are false. Additionally, the exchange addresses the payback solution they've provided to BFX token holders. The company explains many of the rumors circulating concerning making good with its customer base are inaccurate. Bitfinex explains that the socialized loss has affected everyone, including company representatives. Okay, fine. But the difference between the users and the company, representatives or employees, is that the users were not responsible for securing the Bitcoin on Bitfinex's servers. The users were responsible for which exchange they chose to use, right? So they bear that responsibility. But once it's there, the Bitfinex team have responsibility to make sure that they prioritize security. And even then, that's not a given. Every exchange can decide which priorities they have, and that will attract a different kind of customer. If I compromise security on my exchange in preference for faster transactions or greater leverage or whatever, and that becomes my unique selling point, that'll attract a particular type of customer, as long as they're aware that my exchange is slightly less secure than the next one, they'll go, okay, I'm willing to give up security if it means I can get greater leverage. But then you might have a security-obsessed exchange that puts most of its budget into security and doesn't give so much leverage. The transactions aren't as fast or whatever. That'll attract a different kind of customer, right? Because different priorities, people have different priorities, and therefore that's why we have a multitude of vendors, okay? Anyway, here's a quote. So I suppose this is the company representatives of Bitfinex talking. Quote, "We would like to address some stories that have circulated online stating that management has contributed no property to compensating our customers. This is false. Management has committed all reserves of business with a view to making our customers whole. Moreover, any principals and employees of the business with any property on Bitfinex were subject to the loss allocation. In point of fact, 2 of the top 10 BFX token holders are in our management team. We assure everyone that we feel the loss acutely, both as a company and as individual customers." Close quote. Well, that is a bit better. That is a lot better. Imagine if, now I'm not sure if this was the case, but I don't remember ever seeing it in the news headlines. But imagine if when the mainstream banks got bailed out, and imagine if they personally had to take a financial hit in the bailout. You know what I'm saying? So proportionally, what if they had to give up some stock, maybe put some of their own cash in, that kind of stuff? If those were the consequences of bad trading behavior or making too risky bets in the derivatives market, would they still do it? Well, I don't think so. I think that's primarily the problem with the existing financial system is when you have no consequences, you can afford to take ridiculous risks because you don't have to bear the consequences if it goes wrong. In this case, the management team of Bitfinex, they are bearing personal consequences for stuff that's going wrong. So that's a good sign to me that they're going to make sure it doesn't happen again, if only to save their own skin, right, next time around. So back to the article, final section here. However, allocations were also made to pay for forensic investigators, auditors, and advisors to help with the issue. They believe this will assist the company and make sure an attack like this never happens again. Bitfinex says they are committed to deploying all of their resources to make customers' funds whole again. For instance, the exchange is engaging in converting certain qualifying token holders to shareholders of the company and the remaining BFX tokens through a combination of new capital and earnings. So Bitfinex says they will continue to listen to their customers' concerns and their feedback. The exchange says they are deeply grateful to their patrons' patience and they will continue to provide further updates when the time is right. What do you think about Bitfinex's latest update concerning the hack of nearly 120,000 Bitcoins? Do you believe they're going to make good with their customer base? Let us know in the comments below. Well, I do think they are going to make good myself, because if they don't, they're going to get into some serious trouble legally, right? However, it's kind of ignoring the elephant in the room. Let me go back to that bit, which almost made me laugh. There it is. Bitfinex says they are committed to deploying all of their resources to make customers whole again. And, oh, that's not the bit. Where is it? There it is. They believe this will assist the company in making sure an attack like this never happens again. Okay. Well, good luck with that. It's not going to happen. An attack that's exactly the same as this, once you've figured out exactly how they got in, you can put an exact solution to that, but that's not going to mean no one else can break in. There's a fundamental flaw with centralization. Centralization of a big, massive amount of money is by definition a honeypot. So it's a huge incentive for people to break into. When you go to a decentralized exchange model, the incentive is only as the size of the individual wallet. So, for example, if you want to break into my BitShares wallet, you can first of all figure out what my username is, then have a look at what my balances are, because I think they're publicly available. And then you have to first find a large amount of money in one place, i.e. someone who has a single wallet with a significant amount of wealth in it. Then you have to decide, right, that's the one I'm going to target, but it has to be worth your while, because it's going to take you a long ass time to break into it. And it's going to be a fraction of what an exchange would have, because an exchange has thousands of customers, funds all at once. Even if you took the biggest customer and then that was the one thing you're going to break into, it's still not going to be a very big payday for the hacker, is it? So the incentives are all mixed up. So that's why I'm like, why are we ignoring the elephant in the room? Why are we trying to fix the idea of centralized exchanges? Is that because we are in a transition between the world of centralization and decentralization? Maybe, maybe not. Maybe it's just an education problem. Maybe it's just the people that are not aware of the dangers or the drawbacks of centralized exchanges, and obviously are not aware of the alternatives. Well, that's my job, isn't it? Keep listening to the Cryptoverse. I will keep giving you my moral, ethical, and philosophical interpretation, and you can choose to agree or disagree with it. Keep the bin handy at all times. You don't have to accept anything that I say. All I do is offer it to you, and then you can decide to do with it whatever the hell you want. But if I don't offer it, you've got nothing to work with. So there we go. That's going to do it for this edition of the Cryptoverse with me, Chris Coney. Thank you for listening today. If you check out cryptoversity.com/podcast, subscribe yourself on your favorite platform. Click to vote for this episode on the Steam network, please. And also, if you want, make a contribution via Bitcoin using the address on screen now or at the bottom of the podcast page. I also invite you to check out the main site, cryptoversity.com, which is the online school where you set the price to learn about Bitcoin, cryptocurrencies, and blockchains. Right, guys, until tomorrow, it's me, Chris Coney, saying bye for now.